Hey everyone, welcome back to The Explainer. I am absolutely thrilled you're here today because we are unpacking what is easily one of the most fascinating corporate stories of the year. We're looking at UnitedHealth Group, trading under the ticker UNH. And look, whether you've got them in your 401k or you're just trying to navigate the healthcare system yourself, this story directly impacts you. If you follow the healthcare sector at all, you already know that UnitedHealth has had an absolutely wild roller coaster of a year so far in 2026. From just blockbuster financial wins to some seriously alarming headlines, there is a tremendous amount to unpack here, and the contrast between the two is just striking.
Okay, let's dive into this. This is really where the fundamental paradox of UnitedHealth Group begins. On one side of the coin, you have these unprecedented corporate crises. But then on the other side, you've got absolute Wall Street triumphs. It's totally counterintuitive, right? I mean, how does a company experience severe membership attrition and some really serious legal turbulence, but still manage to completely dazzle the financial markets? It's a bit of a puzzle, but as we look closely at the data and the recent earnings, the strategy actually becomes incredibly clear.
Section 1. Blowout earnings and growth. Let's start with the numbers that are making Wall Street so euphoric right now. We really need to look at the high-energy, fast-paced financial wins from their Q2 earnings report that dropped on July 16th. Because when I say they beat expectations, I mean they absolutely crushed them. Just look at this figure. The company posted an adjusted earnings per share of $6.38. To put that in perspective, the consensus estimate on Wall Street was just $4.94. They didn't just edge past it, they completely shattered it. That's a massive 56.4% increase year over year. That kind of growth for a company of this sheer size is genuinely staggering.
And honestly, the volume of cash flowing through the business is just as impressive. Q2 revenue came in at a mammoth $112 billion, which beat expectations. But if you look underneath that revenue figure, their medical care ratio, which is basically just how much they spend on actual patient care versus what they collect in premiums, dropped nicely to 86.7%. UnitedHealth Group CEO Stephen Hemsley summarized this whole momentum by saying, and I quote, "Our results and outlook reflect the continuing progress in our work to simplify how we operate, improve both affordability and the healthcare experience for patients and care providers."
And momentum didn't stop there. Management actually went ahead and raised its full-year cash flow outlook to roughly $24 billion, which is a solid bump from their previous estimates. Plus, because of this incredibly strong performance, they also bumped up their full-year 2026 adjusted earnings outlook, bringing it up to a range of $19.50 to $20 per share. You know, when management raises guidance like that, it's a massive signal. It shows deep confidence in their near-term operational efficiency.
And this brilliantly illustrates exactly why investors are smiling right now. Shareholders are being heavily rewarded. Just recently, on August 12th, the board authorized a quarterly dividend of $2.32 per share. On top of that, they're aggressively buying back their own stock, expecting at least $5 billion in share repurchases for the full year. What's super fascinating here is that despite the stock trading around $402, GuruFocus Analysis places its GF value, that's a metric used to estimate true intrinsic value, at $592.67. So that actually suggests the stock might be about 32.1% undervalued right now.
Section 2. Dropping Medicare members.
Now let's slow things down for a quick second, because just as we're looking at all this financial euphoria, we have to introduce a sudden, major plot twist to the UnitedHealth story. Since the end of 2025, UnitedHealth has lost 965,000 Medicare Advantage members. We're talking nearly 1 million people. So here is the multi-billion-dollar question. If they lost nearly 1 million members since the end of 2025, why did the stock jump 8% in pre-market trading after this announcement? Well, the answer lies in a highly deliberate strategy from CFO Wayne DeViti. The company is actively prioritizing profitability over sheer membership volume. By focusing heavily on quality margins, they actually managed to push operating earnings up to $8 billion. That's a huge leap from the $5.2 billion they reported a year ago, all while serving fewer seniors.
And look, they aren't hiding from this trend at all. UnitedHealthcare is actively projecting that they're going to lose between 1.3 million and 1.4 million total Medicare Advantage members for the full year of 2026. But because they've implemented strategic premium increases, those price bumps are keeping their overall revenue completely flat. It perfectly offsets that massive projected drop in users. It's an incredibly bold, margin-focused play.
Section 3. The Shareholder Lawsuit.
However, as we shift gears here, we have to talk about the dark clouds gathering on the horizon.
Because today, August 13th, Bloomberg reported on a major shareholder lawsuit bringing some incredibly severe allegations against the company, specifically focusing on governance and cybersecurity. So let's look at the timeline of how we got here. This crisis really kicked off with UnitedHealth's $7.8 billion acquisition of Change Healthcare. Following that acquisition, the company suffered an absolutely catastrophic cyber attack. Now, an amended complaint was filed on August 7th in a Minnesota federal court and heavily reported on today by shareholders. That includes the Rhode Island Public Employee Retirement System and a Swedish asset manager. The lawsuit alleges that the board essentially ignored governance and oversight risks for years regarding how they handled cybersecurity.
Just to pull this out of abstract corporate legal jargon and really ground it in reality, this cyber attack was the largest U.S. healthcare data breach on record. It exposed the private data of nearly 200 million Americans. That is an absolutely staggering scale of exposure. It's cost the company billions and naturally triggered intense scrutiny from shareholders.
Now, what's really interesting here is the specific language used in the lawsuit's amended complaint. This is a direct quote, and it brings a shocking allegation right to the doorstep of the CEO. The plaintiffs are alleging that former insiders revealed problems in Medicare billing, and they claim that rather than fixing it, CEO Stephen Hemsley actually supported shutting down an internal audit program. We are strictly reporting on what the lawsuit alleges here, but clearly it is a profoundly serious accusation against top leadership.
The specific financial claim tied to that quote is that the company submitted claims for $200 million in Medicare payments that were not actually supported by patients' real diagnoses. Now, it is absolutely vital to explicitly remind you that a UnitedHealth representative declined to comment on these allegations, and as of right now, these remain purely allegations brought forward in a civil shareholder lawsuit. The company will absolutely have its opportunity to respond in court.
Section 4. Rural Health Expansion.
Let's move on and see how this builds, because despite these severe legal storms brewing, UnitedHealth Group is definitely not sitting still. While the corporate office deals with lawsuits, the company is aggressively pushing forward with expansion out in local communities. Take their Communities of Health initiative, for instance. The UnitedHealth Foundation just made a $20 million national commitment. In Tennessee alone, they're investing $4 million to expand their local health hubs from 5 to 13, aiming to reach about 200,000 residents. And these hubs are doing tangible, on-the-ground work. They've already served over 4,000 people who have visited for things like health coaches and medical screenings. On top of that, UnitedHealthcare is completely eliminating most medical prior authorizations for rural providers, and they're speeding up payments by up to 50% for roughly 1,500 rural hospitals nationwide.
Section 5. Wall Street's Verdict.
So we have two completely different narratives playing out simultaneously here. We've got incredible financial growth, massive shareholder returns, and local health expansion on one side. On the other, we have a catastrophic data breach, 1 million lost Medicare members, and a major shareholder lawsuit alleging governance failures. How exactly is Wall Street synthesizing this dual narrative? Well, looking at the analyst consensus, Wall Street remains highly bullish despite the legal headwinds. Out of 20 analysts on TipRanks, 16 rate the stock as a buy and 4 as a hold. That gives it a strong buy consensus. Even amidst all this turbulent news, prominent analysts, like Bernstein's Lance Wilkes, have firmly maintained their buy ratings.
So the crucial point is that Wall Street analysts are clearly betting the sheer power of UnitedHealth's financial metrics, and their improved profitability margins far outweigh the governance allegations and the loss of Medicare members. The S&P Global Consensus has an average price target of $475.23, and the highest price target on TipRanks reaches all the way up to $529. The market is looking squarely at the cash flow, not just the dramatic headlines. Which ultimately leaves us with the big question for the rest of 2026. Can UnitedHealth's management successfully navigate these massive legal storms and governance allegations, all while continuing to deliver the operational supremacy and profitability that Wall Street has so clearly come to expect? It's a high-wire act for one of America's largest healthcare giants, and it is absolutely a story we will be watching very closely. Thank you so much for joining me for this explainer, and keep learning.